Hey everyone, welcome back to Corporate Decoder, the place where we unravel the financial mysteries that keep CEOs up at night and investors on the edge of their seats. Today, we're diving into PMGC Holdings Incorporated's latest filing. And let's just say, this one involves a shiny new acquisition that could change the game. Make sure you are subscribed for more straight-up financial insights and join our growing community on Discord. The link is in the description below. So, what is the big news from PMGC Holdings Incorporated, or PMGC Holdings Incorporated as they officially call themselves? Well, on the 2nd of February 2026, they announced they've officially acquired SVM Machining Incorporated. This means they now own 100% of this California-based company. Think of it like buying a whole new business to add to your existing one. And they did it by buying all the shares, all the little pieces of ownership. The deal, which they're calling the acquisition, officially wrapped up on that same day, the 2nd of February 2026. This is a pretty significant move for PMGC Holdings Incorporated. It's not just a small purchase, they're taking on a whole company. Now, let's talk money. The total price for buying SVM Machining Incorporated was about $2.45 million. But it's not just a simple cash payment. A big chunk, $2.25 million, was for the shares themselves. Out of that, $2 million was paid right at the closing, which is when the deal officially goes through. Then there is a holdback amount of $250,000. This is like a security deposit. PMGC Holdings Incorporated is holding onto this money for a while to make sure they can cover any potential problems that might pop up later related to the deal, like if SVM Machining Incorporated hadn't been completely honest about their debts or something like that. On top of that, there was about $130,000 tacked on for the existing cash balance in SVM Machining Incorporated. And finally, there is a bit of a tricky part involving something called net working capital. Basically, they estimated what their working capital, meaning short-term assets minus short-term debts, would be. This amount was $130,000 higher than they initially targeted. This difference of $69,148 also got added to the purchase price. But this part of the payment isn't final yet. They'll do a final check after the deal closes to make sure everything is accurate, and they might have to adjust the payment then. But wait, there is more. The seller, the person or people who sold SVM Machining Incorporated, could get even more money down the road. This is called an earnout. It means they get paid more if the business they sold performs really well in the future. There are two tiers of this earnout. For tier 1, they could earn up to $750,000. This payment is tied to how much revenue the combined company, PMGC Holdings Incorporated and SVM Machining Incorporated, makes during 2026 specifically for every dollar the company earns above $2.5 million in revenue, up to a maximum of $3.25 million. The seller gets paid. Then there is tier 2 where the seller could get another $500,000. This is based on revenue performance in 2027, specifically for revenue generated above $3.5 million, up to a maximum of $4.5 million. PMGC Holdings Incorporated will pay out these earnouts within 10 days after filing their annual report, which includes their audited financial statements for the relevant year. To make sure the transition goes smoothly, PMGC Holdings Incorporated has also signed a transition services agreement. This means the seller or an associated company will provide certain support services for about 4 weeks. This is pretty common in acquisitions to ensure the business keeps running without a hitch while the new owner gets up to speed. For these services, PMGC Holdings Incorporated will pay $19,200. And to protect their investment, PMGC Holdings Incorporated has put in place a non-competition agreement. The seller can't start a similar business or try to steal customers or employees in the precision machining and custom component manufacturing market in California for 3 years after the deal closes. This is a standard clause to prevent the seller from immediately setting up shop next door and taking all the business they just sold. They've also got a non-solicitation agreement. This prevents the seller from trying to hire away any employees from SVM Machining Incorporated for 3 years. They also can't encourage employees to leave, except through general advertising that isn't targeted at SVM Machining Incorporated employees. However, there are exceptions, like if an employee was already fired by SVM Machining Incorporated, or if they resigned more than 180 days ago. This is just a high-level overview of the acquisition. The full details, all the nitty-gritty legal stuff, are laid out in the stock purchase agreement, which is available as an exhibit with this report. They also put out a press release on the 3rd of February, the day after the closing announcement, to let everyone know about this big acquisition. Now, for the financial meat and potatoes, PMGC Holdings Incorporated has included the financial statements for SVM Machining Incorporated. This includes their results for the full years of 2024 and 2023, and also a 9-month period leading up to September 2025. This is crucial for understanding the financial health and performance of the company they just bought. They've also provided pro forma financial information. This means they've put together what the combined company's financial picture would look like, as if the acquisition had already happened at those earlier dates. This gives investors a clearer view of the potential combined entity's financial standing. It includes a balance sheet as of September 2025, and statements of operations for the year 2024 and the first 9 months of 2025. Finally, as we saw, the full agreement is filed as Exhibit 10.1, and there is also the press release as Exhibit 99.1. Then you've got the financial statements for SVM Machining Incorporated as 99.2 and the pro forma financials as 99.3. These exhibits are really where you find all the detailed evidence for what is being reported. So, what is my take on all this? PMGC Holdings Incorporated is clearly making a strategic move to grow by acquisition. Bringing SVM Machining Incorporated into the fold could bring significant revenue and expertise, especially with those earn-out clauses designed to incentivize future performance. The big question is whether the integration will be smooth, and if SVM Machining Incorporated can continue to grow under PMGC Holdings Incorporated's ownership, especially with those revenue targets for the earn-outs. The non-compete and non-solicitation clauses are standard but important to ensure the value of the acquisition isn't immediately undermined. The real test will be in those pro forma financials and how the combined entity performs in the coming quarters to actually hit those earn-out targets. It's a bold move, and the success hinges on operational execution and the market's continued demand for precision machining. Alright, that is our deep dive into PMGC Holdings Incorporated's latest filing. What do you think about this acquisition and its potential impact? Let us know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more decoding of corporate filings. And remember, our Discord community is linked in the description, so come join the conversation. Thanks for watching, and we'll see you in the next video.